Hello everyone and welcome to Day Trader S&P 500, a rare Sunday morning recording here, Sunday, April 14th, 2024. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500 YouTube channel. As always, we want to get our YouTube subscribers caught up with our newsletter subscribers information as much as possible. Going back to this wave 1 high, Roman numeral 1, you can see we had a target there and a direct hit on October of 22. Wave 2 low down here in April. Okay, and then from there we've got a 1 up with a circle and a 2 down. I wanted to start from the top down, so from this 1 up, 2 down, 3 over here equals 1 in green at 7.255%. That's the largest degree of trend shown on this chart, and that trigger is activated when this high is surpassed, this one on 10/23 of 23, where we had a target of 5.1 and an actual of 5.021. Okay, from that high we had a 2 down, and we're in 3 up. We're in wave 3 up of 3 degrees of trend. Here's the 1 in black, 2 in black. There are the 3 targets in green. Like there was the trigger that was activated. That's at the smallest degree of trend. The next one is this 1 up with a circle around it. Okay, and you can see that third wave target with a circle around it is 5.551%. And then the largest degree of trend, as I said before, is a 1 Roman numeral up, 2 Roman numeral and down, and 3 Roman numeral up, and that target is 7.255%. So far this third wave, it's extending, and it's going toward the 2.618 target of 4.897. It surpassed the 1272, the 1414, and the 1618. As always, we ask ourselves, where is this wrong? For this degree of trend, this one with a parentheses around it, it should hold above this 3.783 low. If it goes below it, it's wrong. Okay. Other than that, looks like third wave up for interest rates. As we've been saying all along, they're going up. Even though people were saying on TV, we're getting 6 rate cuts this year. Counting on the Fed, we're getting 6 rate cuts in January and February. Then, oh, we're getting 3. And, no, we're getting 1 or whatever. It's like, no, we've said all along, rates are going up. Ever since this low and this low, rates are going up. And the Fed doesn't do anything but follow the bond market. They're following again. I think if this plays out, there won't be any cuts. There'll be raises. So we'll see what happens. Okay, let's move on. Let's go to gold. I want to look at gold here. Let's make this a full screen, and let's see if we can get this into play here. There we go. We'll do this this wave up here from this 4th wave low, and then we can look at the bigger picture. Okay, back here in was it September, October of 2022, we have a wave 1 up, wave 2 down, another direct hit. Wave 3 up is in play. You can see the targets here, and let me get that a little bit better into play. Bear with me in a minute here while I adjust these so they're on the lines. At least get the 1.0 down there, get the 1.272 down there. That's pretty close. Okay, we'll move that up. There we go. Okay, and we're in a wave 1 up, wave 2 down. We're in a wave 3. There's our wave 3 targets. The 1.618 is above. It has attained all the other targets, the 1.272, and the 1.414. So we had triggers and targets on here all over the place. There was our last trigger here. There was our target, and now there's our new targets there. Okay, let me get into the bigger picture. If I can fit all this in, going all the way back to the 2015 low. There it is there. It's a little bit crowded, but we'll make this work. Okay, from the 25th, we've been long gold for years. I guess it's almost a decade now. But we've got a 1 up in parentheses, a 2 down. There's your 3 up right there. And that 2000 level, basically 2070, you can see 2070 there, 2081 there. that provided resistance, but what it was a wave 3 high, and then we had a B wave of wave 4. You can see A in circle, B in circle, C in circle, and there's 4, and that was a direct hit. And then we started in wave 5, and of course the first wave of 5 hit near the previous highs, as it usually does. Okay, so we can look at that a little bit more in depth right there. Okay, there was the third wave high, there was A down, B up, C down. There was the actual and the target and the direct hit right there on 4 within 5 points, or $5 should we say. And then we've got the 1 up there, the 2 down there, another direct hit right on the 618, fairly close, within 18 points. And then here we are in 3, and 3 is expanding or extending, and there are the targets there. Okay, that's it for the gold market. Let's move on to the ES. We are looking at E-mini futures daily chart. There is a lot going on here, okay? From the all-time high, we've got a 1 down and a 2 up, and then we've got a 1 down and a 2 up, and then we have in black here 1 of 3 in parentheses and a 2 up. This thing is in a third wave. There are wave 2, 786 retraces, a little bit above, a little bit below, but right around there for this wave 2, for this red wave 2, which is a near direct hit on that, and another wave 2. Okay, alternately, if we've got 3 triggers here, okay, this trigger's been activated, downside triggers. We've been looking for downside triggers since October. We haven't seen any. We've had 5 or 6 upside triggers making all kinds of profit, okay? But eventually, sooner or later, it's going to end. It's not going to go up forever, right? Anyway, there was the first downside trigger that was activated on April 4th. The next one was this 51.91 low over here on the 10th. And we've got another downside trigger over here, the 50.60 low. I don't know if I can get all the way over there. There it is there. There's that low there. If that one's activated, that will clinch it, okay, the reversal in trend that we've been looking for, because that will wipe out this entire 5-wave rise, which means this move down is correcting more than this 5 waves up, that 5 with a circle around it, okay? So that is the big key right there, the 50.60 low, where we have that trigger over there. I want to undo that. Let's undo that. Let's get that back to big screen. There we go. Okay, so that's what we're looking at. We can show that to you guys on the newsletter. It might be a little cleaner than this here, but that's what we're looking at. Okay, and we'll see how this plays out, because this these wave 3 targets here, that was at the 1618. We were looking at 51.50. It hit 51.49, but the 2.618 is down here. And this is likely to extend because this is no room for this 4, okay? If this is 1 down here, okay, and that is 2 up there, this has to extend, okay? Either that or it's wrong. So we'll see how this plays out. This wave 3 should go down to the 2.618. And we have these smaller degree targets. It's 1 down, 2 up, 3 down there. If this goes up, then that's not 3, okay? I'll explain that more in detail on the chart, which I'll get up on our report that went out Friday. Okay, and there it is there. Okay, April 12th, that was Friday. It was, yeah, post-market close. Okay, here's our recent upside triggers. Okay, starting with the most recent one at the top and the first one at the bottom. As you can see there, 41.85. You know, there was 3 days after the low, we've got an upside trigger. Okay, and then January, February, March, keep getting upside triggers, even as late as March 20th. But each one of these has gains, and you can see, yeah, ES futures are $50 per contract. Some people play more, but if you only played one, and if you added a contract at each one of these triggers, those profits would add up to 108, 162. Okay. Anyway, now we've got downside triggers, and there's our next turn date on May 20. Okay, here is that. Let me get that into into full screen mode there. There we go, right there. Okay, here is that same hourly bar. Trigger 1, trigger 2, there's trigger 3 at 50.60, and there are the 786 retraces, okay, and there's the 1 down to 2 up, 3, 4, 5, and then we've got another. So we've got 3 of 3 of 3 at 3 degrees of trend. We've got the alternate A, B, C. Where does that come into play? Again, we always got to know where we're wrong. Okay, if this high here, 52.85, is broken, that's 1 degree of trend. The next wave 2 is 53.03. The ultimate is 53.33. So we've got it in there. I think the 53.08.50 is the first one. That's where it's wrong, and that's where that ABC correction comes in. Obviously, if we go above the 53.33.50 high, that would be an obvious move to new all-time highs, because that is the high. Okay, but we've got make or breaks, if you will, below those. Okay, these are huge retracements. All right, so let's get into this. There's our current triggers. Those are recent triggers, actually, and then the downside triggers are current. Okay, we need to see all 3 need to be activated for a signal. Okay, so there we are. There's a 52.35 to 51.91, and there's a 50.60. Okay, there are those 3 targets there. Okay, that was within less than a point. There's that 2.618, which could be in play. Here's those 3 targets here. Okay, within that 1 to 2 up, and that is up here. That 1 down here at 51.73 and the 2 up at 52.57. That's those targets that aren't on this chart. But we'll see if that thing subdivides into a third of third wave down. If it does, you'll see this 50-50 hit, and maybe then some. Okay, but there's those downside triggers, and there's the points and the profit, $50 per contract. Okay, and let me put that in there real quick. And there we go. Okay, and there's the one that's not activated yet. There's a larger degree wave 3. There's a smaller degree wave 3 within the larger degree wave 3. This is the smaller degree. This is the larger degree. Okay, and let's see what else. All that verbiage there. It is more likely that wave 3 or 3 of 3 extends down to the 50-50, because there's no room for that 4. Okay, and here's the retrace targets up, and I think they're in red here on the if that does hold, that low does hold and it moves up. We want to make sure we are prepared for every scenario. They're in red here. Might be hard to see on the chart, but they are down here. There's the retrace targets up there from that low of Friday. Okay, any move below wave 51.50, that already happened, as wave 3 is extending. Where is it wrong? The blue right there. Okay, the 53.08, move above that wave 2 high, or 53.33 obviously would be there. Here's what we've been printing since the October low. All right, to get us change of trend, we need to see 5 waves down. That's been achieved. We need to see 3 waves up to a lower high. That's been achieved. We need to see 5 waves down to a lower low. That's been achieved again, but that 3 may extend or subdivide into a lower low. If it is a 3, there's tight stoppage for there's a 4 up there. Okay, after that we still need 2 more steps. One is a wave high of 4 to remain below the wave 1 low, and then from that 4 up we would need to see a 5 down below the wave 3 low. Again, reiterating that wave 3 may still be extending. Okay, we have reprinted this every day I just leave it on there every day for months. I guess it's like 6 months now. Okay, but we reiterate it every day. We continue to look at the smallest degree of trend, 1 to 10 minute charts, for the initial sign of a change in trend, a downside trigger. Until we see a signal, the trend remains up. the move down from that 53.50 high is the most promising yet since that October low. Okay, so we watch them and we report, and that's it. Okay, so let's leave you guys with this one here. Okay, that's the active wave count on an hourly bar. I think I had the same on a 10-minute here on the charts. Maybe a little better to see the smaller degree of trend here. Okay, there we had a direct hit on 4, direct hit on 5, and here we go again. That was not printed, but that was a direct hit also. And here's the most recent one, which was Friday. Nice decline there. Okay, we'll see if interest rates continue to rise in a wave 3 of 3 move up 3 degrees of trend. Wave 3 at 3 degrees of trend. The same here. Okay, we got wave 3 of 3 of 3. The 2s are all up there at 786. Boy, talk about shaking out the shorts. They run these up to the 786 retrace, and then they take it down. So our subscribers to our newsletter aren't surprised. We're always looking for that. The old famous 786 whipsaw retrace action they put in there. They make most of the people lose most of their money most of the time. If you think about that, you're looking for a swift move down, like here. Well, let's take it up, okay? Looking for a swift move down here. Okay, let's take it up. Let's shake out the shorts. Let's get their stops, okay? Another one, you're looking for a big move down. Well, let's take it up to 786 retrace. You can see that right there. And I think I'll show that on the hourly there. There's those 786 retraces there. Okay, there's where most people are getting whipsawed. We're not. All right, we've got our make or breaks, and we've got our Fibonacci retracements, and there's the 3618. I'm sorry, 786. There's the move down following. There's the move down following, and there's the move down following. So maybe we'll get another one. There's that 786. I didn't mention it at 5234.75. We'll see if we get a 4th degree of trend here on the downside. Again, 50-60, all important. That'll wipe out that entire move up from that low right there. Okay, that's it for today. You guys have a great week. I'm sure we'll be checking in again later this week. Until that time, take care, everyone.